Hello, my name is Nedu. I'm your Forex coach, and in today's profitability series, we'll be talking about risk management. Risk management is one very vital aspect of Forex trading that will enable a trader to trade profitably, and a lot have been identified as reasons why even some professional Forex traders are not consistently profitable. And some of these things I'm going to point out in a short while. Number one is trading with stop loss. Not trading with stop loss will definitely lead you to crashing your account. It's likened to a man who drives a brand new car that has no brake. The only option, the only outcome will be a crash. So if you are trading Forex and you want to be consistently profitable, you must use stop loss. Stop loss is an order that is attached to the main market order that enables you to protect the account from any impending loss. No trade is won until the trade has hit a take profit. All right, so for you to be consistently profitable, you must trade with a stop loss. The next thing is proper account sizing. Proper account sizing plays a role in risk management, and I will explain that. If, for instance, you're trading with $10 account, because if you have high leverage of 1:2,000 or infinity, you can trade it as low as $10. All right, and the minimum lot size you can trade is 0.01. So if that trading position goes against you by 100 pips, that account is gone. That account is gone. So low account sizing can lead to two things. One, it will lead you trying to trade so many times, okay, exposing yourself in the market so that you can make something tangible. You can imagine trading with 0.01 with an account of just $10, okay, 50 pips will just lead you to getting just $5, and that $5 may not worth your while depending on who you are and at the level that you are operating. So it's important that you take the right account size. The right account size, what is the right account size? Is that account size that matches with your knowledge and experience in Forex trading, and also that can lead you to making a worthwhile return on daily basis. All right, leading you to making a worthwhile returns on daily basis, depending on your level in life. You can imagine if you're a married man, a family man, and you have a lot of bills to pay, and you're not trading Forex as a side hustle, you're just trading it to meet the needs, and you have this $10 account that you are making $2 on daily basis. It will not work well, and this will lead you to trying to take so many positions, take so many trades in a day so you can make something worthwhile. And remember, the more you expose in market, the longer you stay in the market, the higher the chance of you losing in the market. All right, so proper account size is very, very key in this profitability series. The next thing we look at is proper position sizing. Proper position size, and there are many websites that you can quickly visit. I use my fsbook.com. There is a daily position size, and you can go and calculate the appropriate position sizes to use based on your account size. If you are trading with an account size, for instance, of $1,000, I recommend a risk ratio of 10%, and risk ratio is actually the percentage of your account that you lose if that particular position goes against you, the percentage of account you lose if you lose that particular account. And we recommend between 1 and 2%. So if you're trading a $1,000 account and a trade goes against you, your stop loss is hit, what you lose is just $10. And $10 is a little compared. At least you have about $90 remaining for you to trade in the next day. And of course, if you are trading a live account, before you venture trading a live account, it should have been that you have won at least, you've come to a level of success trading rate that you win at least 3 out of every 5 positions that you trade in the market. All right, and so if that is the case with you, you've come to that level of proficiency. So if you trade the first one and lose just $10 out of $1,000, you still stand a chance of making it in the market. You can imagine somebody $1,000 a funded account, and it trades with 10 lot size. 10 lot size. And you know what that means? 10 lot size means $100 per pip that goes against you. And if 5 pips, if the market goes against you by 5 pips, you've lost $500. You see, you lost $500. And that can be very disastrous to your account. So proper account sizing is important. It's important. So use my FS book, feed the stop loss in pips. You put that in, and also you put your account size, and the system will just calculate the proper proper position size in terms of the lot size that you can place per position. And that is so important if you want consistently win. And I recommend that you target maybe on a monthly basis 10 to 20%, as a beginner. Of course, there are people who take a lot of risk flipping an account on daily basis. Okay, that's fine. But then the longer you stay in the market, the more the probability of you winning in that market. But if you trade today and lose all the money today, what would you use to trade tomorrow? So it's better you trade following the procedures and the recommended procedures that will lead you into making profits and growing wealth through forex trading, because the main objective of trading is to make profits. So you must follow these procedures so you can make the right progress, okay, and consistently win in the market. Another thing is over trading. Overtrading and revenge trading. Revenge trading leads to over trading. Revenge trading is you fighting back. You lost a trade. Okay, maybe why most people revenge is that they've not really followed and understood the trajectory of profitability. Forex trading involves risk, and this risk can be managed. Okay, in forex trading, losses are part of the game, so you can lose some positions and win some positions. To remain profitable means that you win more than you lose. And that is what the proficiency, the learning process, the practice process should get you to. Once you get to that level and you trade the first position in a day, you lose. You trade the second position in a day, you lose. The third one, you lose. Yeah, you can have a streak of losses of maybe 5 in one day. And then you can close and wait for the next day. There are some people who set daily drawdown. And these are practices to manage risk. Daily drawdown. If I go lower than 5% of my capital, I close for the day and wait for another day, because trading forex also involves some level of psychology. All right, it involves some level of psychology. So if you lose and want to get back immediately what you have lost, is revenge. You're fighting with the market, and when you're doing that, you begin to cut corners. You want to increase your risk so you'll be able to get all that you lost in one scoop. It doesn't work that way. If you revenge, the only outcome in revenge is more losses, and you wouldn't want that to happen to you. Okay. And overtrading, I've already told you what leads to overtrading. When your account size is small, when the profit you're making is too small, it doesn't worth your while, it can't solve any problem for you. So the only solution for that is to increase your capital. So if you increase your capital, our returns on forex trading is based on proportions, okay? A percentage of the capital you are trading. So if I tell you to target 1% on daily basis, 1% is too small. How much is my capital? Yeah, 1% can be so big if the capital is huge. So you can target 3% on daily basis, 15 to 20% or 10 to 15% on monthly basis. That can be so huge. You again say 10% of my capital is too small. Just go around, do a little research and find out how many businesses around the world that return 10% on monthly basis. There are very few, and if you can get 10% on monthly basis, it is huge. You can even attract a lot of investors around the world to invest in whatever business that you are doing. In this profitability series, you have to play by the rules. Risk management is one sure ingredient that you add to your trading that will ensure that you win consistently on daily basis. Okay. We'll come again in our next video to talk more on risk management and also tell you more ingredients, things you can add to consistently win the forex market. Thank you.